All right, good morning, everyone, and welcome to MacroAce with your host, Tony. Let's go through the Bank of England rate decision prep then. We've got quite a bit to go through, so let's get on with it. So first of all, what is it? Well, it's the rate that banks pay interest to commercial banks, and the central bank usually meets every 6 weeks or so. So why is it important? Well, of course, with higher rates, that leads to a slowdown in growth or a slowdown or in inflation, or to try and curtail inflation if it's getting out of hand or too strong. And then with lower interest rates, usually that's usually done to support the economy or create growth, and of course that will overall, wherever the rate is set, that has a major effect then on banks handing out loans, mortgages, and credit, etc., and also a major effect on consumer spending patterns as well. Now, where is the economy at the moment? So, where we have the unemployment rate at 4.2% compared to 3.9%. And we also have the unemployment change at 50.4K compared to the prior of 8.9K. So the unemployment rate actually at 4.4% compared to the prior 4.3%. But other areas, so average weekly earnings year on year at 5.9%. Unchanged from the prior, which was revised to 5.9. Inflation, which we had yesterday, ticked down to 2%, hitting the central bank's inflation target then of hitting the inflation target there. And then we also had the core CPI data year on year, which was at 3.5% compared to 3.5%. GDP Q1 at 0.6% compared to minus 0.3%. And then just going back to the other areas, so GDP year on year was at 0.2% compared to minus 0.2%. GDP estimate month on month at 0% compared to 0.4%. Services PMI was at 52.9 compared to 55. Manufacturing ticked up and went into the expansionary phase to 51.2 compared to 49.1. Retail sales data was stronger than expected for year on year, 2.7 compared to 2.8, and month on month was weaker at minus 2.3% compared to 0%. Now, if we look at the previous Bank of England meeting minutes and the rate statement that had come out from the central bank. First, let's have a look at the March 21st rate statement that had come out before this one. And you had Dinger that voted to cut rates by 0.25%. They said that CPI is now expected to fall slightly below 2% in Q2 due to fuel duty freezes in the budget. They maintain their guidance from February's meeting, saying that policy needs to remain sufficiently high for sufficiently long. And Bank of England's Governor Bailey said that we are not yet at the point where we can cut rates, but things are moving in the right direction. Now, the latest report and the rate statement that we've had, which was also paired with the expectations then for the economy, is that they said that overall, you had the Bank of England inflation projections that were lowered across the forecast horizon. Governor Bailey said that optimistic things are moving in the right direction. You also had Bank of England just taking note of market rates, implying less loosening in February and showing the bank rate at 4.8% Q4 2024, 4.3% by the end of 2025, and 3.8% by the end of 2026. So what was happening was that then compared to the inflation forecast, compared to the forecast in February, markets saw the market rates for the Bank of England rate at 4.2% by the end of Q4 2024, 3.4% by the end of 2025, and 3.2% by the end of 2026. They also said that they see inflation at 1.9% in the second quarter 2026 and 1.6% in the second quarter of 2027. But they repeated that the MPC had judged since autumn 2023 that the monetary policy needs to be restrictive for an extended period of time. Now, the market reaction last time round that we had the meeting that had come out, we'd seen weakness from the pound overall in the markets. And as said, the key points then what they had for this meeting, where on May 9th, you had Dingra and Ramsden that voted to reduce the rate to 5%. And then also traders added to Bank of England rate cut bets and favour the first move in June. Bailey also later on in the press conference said that it is possible that we will need to cut rates more than currently priced into the market rates, which led to sterling then weakening. Now, it was trying to reverse its losses after the rate statement and data had come out. But then Bailey had made that comment, and this is why it's always important to not only look at the rate statement and not only to see the rate and the rate statement, but also what the central bank governor says. And that goes for all other central banks as well in the advanced economies, because a flip of a switch to say something that's different to what the markets might be expecting, then that will then provide that move or that extra amount of volatility that then jumps in, as it did back then for when Bailey had made that comment. So the pound then weakened again off of that comment there. Spaymentambo, I hope I said that right, says, should we sell or buy since they will hold? We'll go through that. It all depends on what the statement says. So you can't just say outright yes or no to that. We have to be wary and cautious of the rate statement rather than just looking at the rate itself. Okay, so we'll go through the sentiment then a bit later on of what to expect then and what investment banks are looking at or looking for the rate decision. So this is the current sentiment then. And not a lot has really changed for where the central bank governors kind of sit on the hawk and dove scale, with Dingra being the most dovish member of them all. Ramsden did join her last time round for expecting or looking to cut rates the last time round. So you had 2 members out of the 9 that were looking to cut interest rates, and everyone else remained or kept their rates expectations on hold. So what we'll be looking for from the members then is if you have one of the other members that join the dovish side and look to also cut rates for this meeting as well. So if that were to happen, if the current expectation is for 2 of the members, Ramsden and Dingra, to vote for a cut again at this meeting. But if you have a third member that also joins in and wants to vote for a cut at this meeting, then that means that the pound could face a bearish reaction, and in turn means that the shift is happening, but it might not be fast enough. The reason why I say that is because the markets might be expecting the central bank to be a bit quicker with their expectations for when they want to cut interest rates. Now, the reason why that would happen, if with the central bank that they might not be so quick, is because first of all, you have the election coming up on July 4th. And that means that the central bank isn't going to do too much to try and rile the markets up or change monetary policy to then affect the election campaign, where things might be things could change drastically. So central banks don't tend to do anything during the run up to an election. They can kind of keep things quite stable, and you don't really expect them to do too much. So this meeting then, same thing, and as I said in another prep video on FJ Elite, when I gave a shorter breakdown, you're not really expecting the central bank to do much today at this meeting. Well, that is the base case scenario for them to kind of just trudge along and probably steer the markets towards an August rate cut instead. Doesn't mean that there can't be any surprises though. So so that's not really going to. So you know, you never know. They could decide to cut rates at this meeting if they wanted to. But most of the time, central banks, when they reach their inflation target, they look for a bit more, sometimes a bit more weakening. So, you know, you've hit the mark, but okay, just for added security, you're looking for inflation to either stay at that point at 2% or go slightly lower, for then the central bank to start cutting interest rates and then moving on within their rate cycle path. KBL1, and an election and another CPI print before Bank of England easing cycle begins. I think I've just answered your question, probably. Okay, carrying on then. So if we're looking at the Bank of England comments, then Bank of England's Governor Bailey on May 9th, as he said that global inflation shocks are fading. We're not yet at the point to cut the base rate. Higher than expected wage and services inflation since February should give us pause for thought, but shouldn't overinterpret. June bank rate cut is not ruled out or planned. Bear in mind, this is before the general election was called by Sunak. And as said, he did say that it's possible that we will need to cut rates more than currently priced into market rates. And as said, the sterling had weakened after trying to initially reverse its initial decline from the rate and the rate statement that had initially come out. Bank of England's Pill on May 14th said that we can cut rates while leaving our stance restrictive, and that led to sterling seeing a decline. May 21st, before stronger than expected CPI data, Bailey said, I think the next move on rates will be a cut. Of course, now that's gone out the window, and probably Bailey's kicking himself a little bit for trying to provide some guidance then to the markets. But of course, you know, he wasn't going to know that the election was going to be called. So things were different back before then. Deputy Governor Broadbent said that we don't have a very precise view on where Bank of England rates will end up. And then he later went to say he also said earlier on May 20th that there is unclear persistence of second round inflation. May 16th, Bank of England's Green said that sterling has already shifted a lot, and some of the different rate expectations for the Bank of England and Fed are already priced in. So for the rates, what that means for the rate decisions when they do come out is that a lot of the moves are already priced in, and you don't really expect too much of a market reaction unless the central bank goes against what the markets are expecting. So for this meeting, the central bank isn't expected to cut interest rates, and they're going to try and steer the markets towards August, you know, being open, and they're saying that they need maybe a little more confidence on inflation, although it may already hit 2%, which they will say is a good sign. They may need a little bit more data and reassurance then, or assurance that the inflation is stable and steady at around 2% before they decide to cut interest rates, and that will then kind of cover their tracks then to then wait till the election occurs and then say, okay, we're ready to go in August, potentially. Every scenario is a potential scenario. So, but that's the name of the game. You've just got to be prepared for the potential scenarios that could occur. If we're looking at the investment banks and market views, so if we're looking to one of the other institutions, actually, the IMF, they said that on May 21st that the bank should cut rates by 50 to 75 basis points this year, and they expect a further 100 basis points of Bank of England rate cuts in 2025. CBA, they said on June 14th, the central bank is widely expected to leave interest rates unchanged. Analysts will be watching the voting split of the Monetary Policy Committee for hints that the Bank of England is closer to an interest rate cut. So you have three things to look out for then: the rate, the monetary policy statement, and also the vote split as well. Because all of those things combined together, if you do get a mix of, let's say the central bank doesn't cut interest rates but the voting split is more in favor for a rate cut. That could then provide a downside move to the pound. If, well, let's say if it's 3 rather than 2 members that are looking for a rate cut, and then if the statement itself is then hawkish, and they feel that they need a bit more time to work on inflation, even though they've already hit their 2% goal, that hawkish rhetoric could then provide a moderation then to any downside movement that then occurs. Or it could be the other way around. Maybe there's a bit of an upside movement, and then there's moderation from the vote split that has occurred. So those are the kind of things to be aware of. So ideally, you want the central bank to not cut rates, to vote more in favor of a rate cut. So see another member to vote for a rate cut, and the central bank to be dovish in their stance in their monetary policy that inflation has reached the 2%. They probably need a bit more assurance, but they're more confident in their expectations and are ready for a rate decision in August for when to cut rates. So Morgan Stanley on June 14th, they said that rates would be kept on hold with messaging and the vote split of 7-2 unchanged. Post-elections, the MPC will then guide the markets towards an August cut. That's their base case. They say their inflation print that shows some softening in the underlying price pressures, but leaves the headline services inflation rate above the May MPR forecast, will likely leave the judgment around receding persistent risks in place. So if we're talking about service inflation expectations from the Bank of England, they're looking at the services inflation to go below 5% by September of this year. Now, we're currently at 5.7% for services inflation, so the likelihood then of that going below 5% by September is kind of up in the air. But if they do hint and talk about services inflation being stronger than expected, and that they may need a bit more time then to assess data within the markets or within the economy, then that might then provide that hawkish or extra hawkish bias then for then the pound to see a move towards the upside. If you get the same split in votes as well, if it's 7-2, if it's 6-3 in favor of no change, then the market reaction might be a bit more muddled. ING said they reckon they'll see 2 of the 9 committee members voting for a rate cut on Thursday, which would be a mirror image of May's decision, and that may be hard to square against the idea that the committee is very close to cutting rates. Economists will be listening out for Bank of England messaging on liquidity conditions and their impact on the economy, as well as any hints that the bank's confidence has been shaken by the latest data. And that was according to ING Smith making those comments there. Okay, market pricing. So May 15th, UK rate futures pointed to a roughly 58% chance of Bank of England quarter-point rate cut in June versus 50% before the US inflation data. The Bank of England, according to 38 of 71 economists, is expected to cut rates by 25 basis points to 5% in August, and 31 said June, 2 said September in a poll. May 22nd, you had traders that paired their wagers on Bank of England June rate cut after UK CPI data. Traders saw just 38 basis points of Bank of England rate cuts this year, and traders no longer fully priced 2 Bank of England rate cuts this year. May 23rd, traders priced out any chance of a Bank of England interest rate cut in June. June 7th, interest rate swaps in the UK showed 34 basis points of rate cuts priced in for this year versus 37 before the US jobs data. June 12th, the Bank of England is expected to cut rates by 25 basis points, 5% in August, according to 63 of 65 economists, and 2 said September. So you see that shift then that goes post the election being called as well, the shift in sentiment then for the central bank to then deliver their first rate cut in August. Also with the data as well, bear in mind the data that we had yesterday, it was in line with expectations. So the pound did see some strength off of the back of also stronger than expected services inflation. So that could be seen as that inflation is sticky within the UK. So ideally, if the data was slightly weaker than expected, then that would have provided more of an impetus then potentially for a maybe for a stronger chance for an August rate cut at the next meeting. If it was super weak, then June could have been on the books, maybe, with a slight chance of a rate cut happening. But as I said, central banks don't tend to do anything in the run up to a general election or an election in its entirety, because they don't want to make any sort of provide any sort of volatility then, not only to the UK economy, to an economy, but also to the markets, and then how the currency will then perform if it starts jumping up and down. All right, and June 19th, traders pair their Bank of England rate cut bets after CPI data, seeing 39 basis points in April. It's 39 basis points in 2024. So then if we look at the last rate decision that we had and the market reaction that then had occurred, also bear in mind, just kind of skip back. There we are. So I'll pause it here, but don't forget to give the video a like, share the video, subscribe to the channel, get the word out there. And, you know, of course, if you've enjoyed the video and you found it useful as well, don't forget to do that and show your support. But yeah, let's have a look at the last rate decision then, where the rates were kept on hold as expected. But the vote split is what we're looking out for here. So the expectation was for 8 members to vote for no change and 1 member, Dingra, to vote for a cut. However, what we got was we had 7 members who voted for no change and 2 members that voted for a cut, and it was Ramsden that had joined in, and hence you see the weakness then from the pound off of that vote split that had occurred. So if we get a 3rd member that joins in for a rate cut with Dingra and Ramsden, then you could see, then you could get a further downside move. Then you could see a further downside move or a similar market reaction that we had seen here the last time around. But if the vote split remains unchanged, then you're looking to what the rate statement is saying, whether or not they're confident that inflation will continue to move towards the downside, or if they're waiting for a bit more assurance then from inflation data that it is going to stay around the 2% goal and it's not going to move back towards the upside enough for then the central bank to say, okay, now's the time to cut rates at the next meeting. Bearing in mind, you also got to consider with Bank of England's Governor Bailey, he's in a little bit of a pickle because the ECB have been able to cut their rates, but the Bank of England haven't. And what would be the likely scenario, or would have been the likely scenario at this meeting, would have been that Bailey then would have guided the rest of the MPC members, say, okay, look, inflation, it's already close to 2%. That's more than enough for us to then consider cutting rates, and that's when we should do it. But as said, with the election in play, it's kind of kept him away from taking any drastic decisions. But you never know. He could decide to say, okay, look, we need to cut rates, and it's not really going to have too much of an effect on the markets as maybe traders might be pricing in, or what the market rates are implying. So we'll be able to cut rates and then maybe do another rate cut then maybe deliver no rate cuts in August, and then wait for some more data or for inflation to go further down, and or weakening in the UK economy for then further rate cuts to then take place, rather than just the one that is expected, or 1 or 2. All right, so if we just kind of skip ahead, and we'll see how the markets were overall. Okay, So you can see that it's still held its move towards the downside. It hadn't quickly reversed like we have had where some economic releases or some rate statements have happened, because the rate statement maybe hasn't changed that much, or you haven't really seen too much of a change or shift in rhetoric from the previous meeting. All right, so let's get out of this video here. We've got about 5 minutes left before we get the rate decision from the Bank of England. So I'm just going to get myself set up on TICKSTRIKE. And so what we're looking for then, ideally, is for the central bank to say that they're comfortable with where the rate, where inflation is, and they believe that they will see further disinflation, and they won't have to wait for any more data to kind of get that reassurance to provide a dovish market reaction for the pound. And you'd see a bullish market reaction then, or a bullish market reaction then for the FTSE, if that were to occur, if that was said. But before that, if they do decide to keep rates on hold, we want to look at the vote split. If you have another member then that joins in the camp for a vote cut, then they'll provide that downside bearish reaction. If you have no other members, if it is just 7-2, then we're looking to the rate statement then for any further guidance. All right, so hopefully you guys can see that screen. You should be able to see that there. I'm just going to try and adjust it. I think we're fine. Okay, so we've got about 4 minutes left. So FinancialJuice, if you haven't come across it before, provides you with a live voice and text service, keeping up to date with what's going on within the markets and any shift in sentiment that has occurred. Maybe that there's been, let's say, if Bailey says something in the press conference later on that then shifts the pound into a different direction, that could then have an effect on the market. So the key thing is keeping up to date with what's going on within the markets, what's being said by different political or central bank members, all live and in real time as well. Now, this is, here we go. So we have the feed here. I'll just kind of bring it out a little bit. There we go. Make that a bit smaller so you can kind of see. We've got about not too long left. So we've got about 3 minutes, or about 2.5 minutes before we get the rate decision. Let me put that up together. There we go. All right, so yeah, as you can see, we have the news feed here in the middle with the text headlines. You have your live voice feature that is here for the voice headlines. As said, all live and in real time as it is with the text data. On the left-hand side, you have your economic calendar as well, keeping up to date with what's going on, what to expect for the day ahead for economic releases, and also the week ahead as well. You can see with the French OETs, which have been quite a bit of a problem for France, but not only France, but also the rest of the bond market as well, particularly within Europe, where yields have gone higher, and there's been this risk effect that has taken place of moving assets, moving out of French assets into other areas, or away from French assets to safe haven assets and non-French assets. All right, so we've got about a minute left, and we'll kind of wait and see what happens. TICKSTRIKE as well, keeping an eye on the strength of the buying and selling momentum via this ticker box here, which shows you how strong the buying or selling momentum is within that asset. That's, you can look at how strong the buying or selling momentum is within FX, equities, futures, your internals like your ADD or VIX, crypto as well, and stocks. Actually, I've already mentioned that. But yeah, so you can keep an up to date with what's going on within the markets and the volume of strength. Okay, we've got about 30 seconds. I'm going to go quiet now. And what I'll also do is I'll do a review then of the headlines that have come out. Just a final thing as well, the biggest market reaction strength came out from GBP New Zealand dollar last time round. So GBP New Zealand dollar and GBP JPY are usually the two biggest movers within the market. Okay, I'm going to go quiet now. Bye. Okay, so let's through what the central bank then said. Just turn it off for a second. So they repeated that they will keep under review for how long the bank rate should be maintained at its current levels. They said good news that inflation is back at 2% and need to be sure that inflation will stay low before cutting interest rates. So kind of what I said, they need assurance then. What else is said here? They repeat there was a range of views among MPC members who voted to keep rates on hold about how much more evidence is needed to cut. Let's see what else they have here. Decision not to cut rates was finally balanced for some. And Bailey does not repeat May's statement that he's optimistic that things are moving in the right direction for a rate cut. Okay. What else do we have here? Let's see. So same again, Ramsden and Dingra voted to cut rates by 0.25%. What else we got here? Labour market is loosening, but is still tight by past standards. Some played down the threat from services CPI and minimum wage hikes. So that would have then provided the impetus then for the downside move on the pound for the initial market reaction from there. So besides in services inflation being stronger than expected, kind of been put down a little bit by some of the MPC members. Okay. Yeah, okay. So they're not really making a big fuss then of the services inflation data overall. CPI to rise slightly in the second half of 2024 to around 2.5% as past falls, energy prices falls fade compared to the May. So no change from the May forecast then for the CPI expectations. What else? Yeah, there isn't really too much there then for the Bank of England. They note that the timing of UK election on July 4th was not relevant to the rate decision as well. Okay, so traders add to Bank of England rate cut bets then price 47 basis points of cuts this year. So that was something that, if we're looking at it, what it was before, if it was about 39 from the CPI data that had then come out, then of course that's a change in that sentiment. They're expecting more rate cuts from the Bank of England the next time round, or in 2024. What else we got here? Gilts gain after Bank of England decision. 10-year yield down 2 basis points. Okay, 100 to 4.05%. Okay, that more or less concludes the live stream then for the Bank of England. If you found this video useful, don't forget to give us a like, share, and subscribe to the channel. Get the word out there. As said, if you found the video useful, content useful, for FinancialJuice Pro, what you can do is, if you want access to FinancialJuice Pro, then all you've got to do is sign up to, well, you just see. Well, first of all, make an account if you've never come across FinancialJuice. Just try and get the link for you. Don't know why that was doing that. Hold on. There we go. It's build. Okay. There we go. Yeah, so that's the link to FinancialJuice to sign up to FJ. If you haven't signed up, if you've never come across it before, make an account first. That will take you to the light version of FinancialJuice. Now, the light version of FinancialJuice, it does have a delay. You do have adverts that do play throughout the day. And as there's a delay across the site for both the voice and the text feed as well. Okay. So yeah, if you want to get the live pro version, we do have. So of course, if you do want to go for the live pro version straight away, we do currently have an offer to get FJ for $99 a year with a promo code of Juicy92. So with that promo code Juicy92, you can get access to FinancialJuice Pro, where there is no delay to the voice or text. You get access to the news desk, which will be us, the analyst, keeping you up to date if you have any questions as to why the market's moved in a certain direction, letting you know what's happened, and we can answer all of your questions there in this little bit. You should be able to see it there. You can be able to ask us questions and we'll answer it, of course, as best as we can. Also, you have the with the rates. With the rate as well. As I said, you have the live calendar here on the left hand side, so you would have seen that instantly with the data when the data had come out. So no delay at all with the pro version, and this is the link here to the pro version of FinancialJuice. Okay, so there it is there for you. So remember, with the pro version of FinancialJuice, if you want to go straight to that without going to and you don't want to be on the light version, make an account on the light version first. Go to your email and just verify your account. Then there will be a button here in the top left-hand corner, which is kind of where you can see me clicking away, where there'll be a thing where it says it will say Go Pro. Click on that and select your subscription, and then once you've done that, then put in the promo code Juicy92. So instead of paying $1,200 for FinancialJuice, you get a 92% discount, and you pay $99 for a year, for a year's subscription instead. All right. So that's the link there for FinancialJuice Pro. I'm just going to pin it so it's easier to see. Also, one of the things that I do want to show you guys is the deviation then. Okay, so the deviation here, basically the ranges and deviations shows you how strong the markets have reacted to, or how weak the markets have reacted to an economic release, depending on what the data is. And here, for the interest rate decision, we also have the sentiment too, but let's kind of explain what these mean first, just so you get a better understanding of what we're looking at. So here is the initial. So here, these figures here, what they represent. You have the initial figure here showing the initial market reaction. This is all on a 1 minute chart, by the way. The initial market reaction going to the wick of the candle, And then the figure in black brackets shows you the move 10 minutes after the release has occurred, going to the end of the candle. If you see here where it says 33.7 pips down, and in the black brackets it says 36.9 pips down. If there isn't the word up in here, as you can see here, or another, if there isn't the word up or down in that black brackets or the blue brackets, then it means it's moving in the same direction. Okay. If you do have the word up or down in the black brackets or blue brackets, that means that there's been a reversal of that initial market reaction to then move in the opposite direction. And then here in the blue brackets, you might not be able to see me highlighting it very well, but in the blue brackets here, that shows you the move 30 minutes after the release has occurred within the markets. Okay, so that's quite useful to then understand, what kind of position that you want to take, how much risk you want to put on, or where you'd put your stop loss and take profit, depending on how the economic release has come out. But as I said, not only looking at the Bank of England rate decision, but you also have the FOMC. Also, recently we added in the Bank of Japan and the S&B rate decisions as well to the ranges and deviations Google Sheet, and also the RBNZ rate decision. So those are the three new rates we've added. So RBNZ, actually the RBA, you also have the BOJ and S&B that have been added as new rate decisions. So covering more stuff than more economic releases across the market. Okay, we also have the New Zealand GDP data, which I've got to add to the ranges and deviations because that had a nice market reaction as well. All right, so if you want to get access to the ranges and deviations, then all you've got to do is sign up to the MacroAce mailing list, which I'll provide in the link here. Okay, here we go. John N says, great stream as always. Thanks. Thank you. Glenn Duke says, first time to a live stream. It's great. Many thanks. Thank you very much for joining. And yeah, hopefully you found the information useful. But yeah, so there's a link to sign up to the MacroAce mailing list. Now, one of the things that, so let me just give you an example then of an email that we would put out for the week ahead. If I just grab it here and move it over. Here we are. So that's an example of an email that we would send out to the MacroAce subscribers. So you get a bit of a rundown of what to expect for the week ahead in Asia, Europe, and the US. Kind of a summary of what the markets have been doing, if there has been. A summary of the news as well for each of those sessions from the week prior. And also, that's where you get the deviation links to the deviations then through these two links here. Through this link here and the link to the upcoming live streams as well. Okay, if we kind of go down, you see a summary of the news so far for if there was anything to keep an eye out for. But one other thing that I do want to mention, now for some of the MacroAce, so before with MacroAce, you just get the live stream for the releases that we would be covering for the week ahead. Now, there are some releases that I have been covering, such as the UK CPI data, where I've provided a bit more, I've provided short videos of what to expect for that economic release. As of course, if I'm not here in the morning, covering any economic releases. Usually the main focus is on the releases that happen within the US session or just before the US session, such as the ECB or the Bank of England rate decision. Okay, so that's something that we add to the playlist then for the live streams, which then keep you up to date with any other videos that I post out for you guys to have a look at. Okay. All right. Other than that, enjoy the rest of your day. That concludes MacroAce then for the week. Bear in mind later on, there isn't too much to look out for, other than the PMI data on Friday for Europe. So I'll just give you a sneaky, cheeky preview of that then, of the ranges and deviations. So this is also another thing that I want to show you guys too. Finally, final thing. So here, I jot down the expectations then for the high and low estimates for the economic releases, or the major economic releases that are most likely to have an effect on the market, here on the deviations sheet that I have here. Okay, and of course the releases that are done, then of course they're just kind of then they're removed after the day ends. All right, ladies and gents, thank you very much. Enjoy the rest of your day, and I will see you guys next week. Bear in mind, I'll send for those of you who've just signed up to the MacroAce mailing list or looking to, you'll get access to the ranges and deviations in the email that I then send out on the Monday. And I only send out one email a week is what I do. Okay, take care and goodbye.